Do you think investing is complicated? It really isn't. It's really simple. But a lot of times people just make it more complicated than what it is. Don't make investing complicated. It's very simple. It's very easy. If you don't know what you're doing, you invest in index funds. These index funds hold all the stocks that you guys hear about all the time, all the companies that you drive by all the time. Just think about it. Every time you drive near a shopping center, you're driving past stocks. You're driving past companies. Every time you see Ulta Beauty, that's a stock. You see Nike, that's a stock. You see some of the grocery stores like Kroger, that's a stock. Walmart, Target, etc., etc. Dick's Sporting Goods. These are all stocks. The phone that you use, it's a stock. Your laptop, Microsoft, it's a stock. The programs within Microsoft are stocks, like CRM, Salesforce, ServiceNow. These are stocks. The oil that you put in your car, like Valvoline, it's a stock. The car itself, like Tesla, GM, Honda, Toyota, these are stocks. So, if you don't want to invest in individual stocks, if you don't have time, if you don't want to read, if you don't want to check out the analysis of the financial statements or listen to the news on CNBC and all that nonsense, just buy index funds. It's so simple. It's so easy. And masters like Warren Buffett and Charlie Munger, they've recommended people buy ETFs because it's less stress. Set it and forget it. You don't have to worry about it. You put money in it for the next 20, 25 years, you're good. The problem is people want to get rich. These get rich schemes, and it doesn't work like that. That's why I preach the same thing over and over to you, man. Buy index funds. All these IPOs, and I know you probably seen my shorts when I talked about SpaceX IPO. All these new IPOs that are coming out, eventually they're going to work their way into the NASDAQ. These are tech companies. The NASDAQ hold the greatest tech companies within the ETFs, right? So you don't have to do no homework. You just got to be consistently buying the QQQ each time you get paid. If you want consistent growth in tech companies, and you're very interested in learning what's going on with the tech companies, and you want to invest into to all the AI companies that are coming out, all the IPOs, my opinion, the QQQ is the best engine for that. That's the best system to get rich off because it gives you back 13 to 14% a year. It actually gives you a little bit more than a VOO. Look it up, Google it. I want you to Google the returns on QQQ ETF for the last 15 years. It's about 15% almost. So you put $100 into that, you're getting 15% every single year on that. You're putting $100 a month for years, and you're getting 15% a year. Come on, man, do the math. And in order to do the math like that, all you need to do is download a compound calculator. Go to your app store and download something called the compound interest calculator. That way, you don't have to do math in your head. You can just do it on the calculator. But the ETF that you want to invest in is the QQQ. That's the one we're going to talk about in today's video, the QQQ. Because the QQQ has 100 tech companies in it, the NASDAQ, 100. That's what that is. So every time you're looking at the NASDAQ on the stock chart on CNBC, you see a little QQQ, or you see the NASDAQ, we're talking about tech companies. So all those companies that you may like, Tesla, Nvidia, Meta, Facebook, well, it's the same thing, but Microsoft, Apple, all those stocks are in the NASDAQ. That will give you back 14 to 15% a year. You put $100 into that, you're good. That way you ain't got to listen to these YouTube people. That way you ain't got to listen to me. You don't have to listen to me you don't have to listen to nobody if you put money into an ETF, the QQQ, right? Tech companies. And let's just say you want some other companies. You want like non-tech companies. If you put your money in the VOO and a QQQ, you're good. You don't have to listen to nobody ever again. You do that for 10, 15 years, 20, 25 years, you're good. You don't have to listen to none of us. None of these fools on here telling you to get rich. You don't have to listen to news. You don't have to look at CNBC. You don't have to do your research. All you got to do is consistently invest into the VOO, which give you the 500 companies, right? And a QQQ. Now, Let's just say you don't want to invest into those 2 ETFs. You don't have time for that. You just want to invest in 1 ETF. Then you invest in the VTI. VTI. That's the Vanguard Total Index. That index has every stock that is public in the index, in the ETF. You buy that, you have a piece of every single publicly traded stock in the VTI. VTI, right? So if you don't want to invest in QQQ, you don't want to invest in VOO with 2 ETFs, just invest in 1. Set it and forget it. I am giving you the blueprint for easy investing. Now, once you get accustomed to those ETF and you start seeing your brokerage account, your Roth IRA grow, then if you will have time, do your research on some of those individual stocks that you may or may not be interested in. Do that. But don't rush into it. You're not going to get rich overnight. It doesn't work like that. Some of those stocks that have went up 100 and 600% this year, they have insider information. You don't have that insider information. I don't have that insider information. And I be reading and listening to news all the time, but I don't have the insider information. And as long as you don't have that, you have lost. If somebody's telling you to go ahead and buy Micron right now, it's probably too late. You should have got it when it was like $200, $300. Now it's at $900. If somebody's telling you to buy Bitcoin when it's already at $150,000, which is not, it's at $68,000 right now. But when it was at $150 and they was telling you to buy it, it's too late. Now, go online right now and see if anybody's telling you to buy Bitcoin right now. I guarantee you're not going to find nobody in YouTube atmosphere right now telling you to buy Bitcoin right now, because Bitcoin is all the way down to about $60-something thousand. Now, you would think all these Bitcoin gurus and Bitcoin people that really believe in it would be making videos telling you to buy it, right? No, that's not how it works. The stock market is so crazy. People loves when the stock market's high. That's when they want to put all their money into it, when it's all high. No, and that's why in my last video I told you to have some cash on the side to get ready for this dip, because it's coming. And it came. I put that video out on Thursday. I'll put the link into the description for my last video about having some cash and getting ready for this pullback, because it's coming. And it's already here, basically. Now, on Monday, the stock market may bounce because you can't really have too many oversold conditions, right? So the stock market may bounce up a little bit, but eventually it's going to go down a little bit more during the summertime. And that's where we take advantage of it. And if it doesn't, you'll still be invested. That's the thing. See, a lot of people think when I come over here and I'm telling you to have cash and get ready for the dip, I'm not telling you to sell your stocks. I'm not telling you to sell all your stocks. What I'm telling you is to have cash on the side to buy dips that are natural occurrences within the stock market. They are natural, and they're going to happen. It's not going to go all the way up all the time. And right now, we have a little dip, have some money on the side, buy some of these stocks. Some of these stocks went down 5-10% on Friday. Now you can buy them and get that 5% that's been lost. I'm just saying, investing does not have to be complicated. You don't have to worry about things if you just invest into those ETFs. That's why people talk about them all the time. That's why I do the same thing. For you men out there that's 40 and above, don't know what you're doing, go ahead and open up a brokerage account, open up a Roth IRA, download the Fidelity app. It'll show you how to establish an account. It'll ask you if you want to do a Roth IRA account, a regular IRA account, or a brokerage account. You're going to select Roth IRA account. You put your social security number in there. You put your account information in there, your bank routing number in there. If you don't know your bank routing number, all you got to do is Google it. Then go to your account information to get your checking number or your savings number that you want your money pulled from each month. Then once you establish that, you got your money going into your Roth IRA. Just because it's going to your Roth IRA, it's not really making any money. So now what you need to do is, besides having your Roth IRA account, now you got to have stocks in there. Those stocks that I mentioned are the ETFs, VOO and QQQ. Now, let's just say you only got $100 a month going in there. You put $50 into your QQQ ETF and $50 into your VOO ETF. All you're going to have to do is search up VOO in the search bar within the Fidelity app. In the app, once you pull it up in the app, it's going to give you information about the VOO. Down at the bottom of the VOO, it's going to say buy, like trade. Trade means to buy or sell. Hit the trade button, you're going to hit buy. Then it's going to have a dollar amount. You're going to put $50 in there. That's it. And then hit buy. That's it. Then it's going to go to your account. you're going to have $50 in worth of VOO in your account. Then you're going to take the other $50, look up QQQ, and do the same thing. Hit the trade button, hit buy, dollar amount, $50, hit buy. Now you have $50 worth of VOO, $50 worth of QQQ. Now, what that equals probably about point something share of VOO, because the total one share of VOO right now is like $700. The same thing for QQQ is about $700. But don't worry about that, because what happens is you're buying a piece of a share. Eventually, you're going to have one share. You keep putting money into your Fidelity account and keep buying those QQQ and VOO fractional shares. Eventually, they're going to equal up to one share. And at the end of the day, it does not matter how many shares you got. It's all about the amount of money that you have in those ETFs. And every year that you put your money in, $1,200 a year into the QQQ or the VOO, it'll give you back 13 to 15% a year in your returns. All right?